Let's break down the key drivers that are shaping this bullish outlook. We're in an age of global unpredictability. Whether it's fears of regional economic slowdowns, rising tensions in the Middle East or Asia-Pacific, or the ripple effects of political instability across continents, uncertainty is everywhere. And when uncertainty rises, so does gold. Investors traditionally move towards safe haven assets, and gold sits at the top of that list. As fear spreads, demand for gold climbs, pushing prices higher. And with no immediate end in sight to geopolitical flashpoints or economic fragility, this tailwind is likely to persist. Even as some central banks claim progress in taming inflation, core costs remain stubborn. From food and energy to housing and services, prices are still biting. Gold thrives in such conditions. As inflation erodes the real value of money, gold's reputation as a hedge becomes more valuable. When currencies lose purchasing power, tangible assets like gold become essential for wealth preservation. Inflation, in essence, is silently fueling a steady surge in gold demand. Central banks worldwide are significantly increasing their gold reserves, reinforcing gold's role as a cornerstone of financial stability. In 2024, central banks collectively added over 1,044 tons of gold to their holdings, marking the third consecutive year of net purchases exceeding 1,000 tons. Why? They're looking to reduce reliance on the US dollar and build resilience amid global instability. This official demand isn't speculative, it's strategic, and it puts a solid floor under gold prices, providing long-term upward pressure. The People's Bank of China, PBOC, has been a prominent buyer, adding 44.17 tons of gold in 2024, bringing its total reserves to approximately 2,280 tons. This move is part of China's broader strategy to diversify its reserves and mitigate risks associated with the US dollar. Other notable central bank purchases: Poland, India, Turkey, Kazakhstan, Czech Republic, Qatar, and Egypt. This widespread and sustained central bank demand underscores a global shift towards gold as a reliable store of value amid economic uncertainties. The strategic accumulation by these nations not only supports higher gold prices, but also signals confidence in gold's enduring role in global financial systems. Gold and the US dollar have a historic inverse relationship. As the dollar weakens, gold strengthens, and today, several factors are threatening the greenback. Rising fiscal deficits, political gridlock in Washington, and concerns over the sustainability of US debt. If the dollar declines, gold becomes more attractive globally, not just as a hedge, but as a currency alternative. A weakening dollar unlocks new demand from international buyers, adding fuel to gold's rally. Trade wars and tariff threats don't just disrupt commerce. They trigger uncertainty and inflation. Whether it's new duties on essential goods or retaliatory measures between major economies, the result is the same: higher prices, slower growth, and shaken investor confidence. This environment is a perfect storm for gold. Tariffs drive inflation. Trade wars fuel uncertainty. Both strengthen the case for holding gold. As global trade policies shift and tensions escalate, gold becomes a strategic asset, not just a defensive one.